now we are live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we break down the markets one step at a time, news, charts, information, pretty much anything grabbing our attention that we want to analyze and discuss here as a team. Have some fun while we're doing it. Hopefully give you guys some insight and some value into your own personal days. Welcome out, everybody. It's Friday, the last day of the week here. We've had a pretty interesting week in markets, back and forth. The Monday morning trade, that big gap up, and then market trying to digest it. We'll get a read from Coach Matt and Coach Frank on a technical breakdown as to what they're seeing, the healthy nature of this back and forth action, if they think it's developing into some nice price action for entry points. We'll talk all about that through the show. We've got Frank here. Frank's charts a little bit later in the show as well. Frank, you first here. How you doing, sir?
Doing well. As always, very happy to be here. Happy Friday the 13th. So we've got that going so we got that going for ourselves today. But no, I like the weekend in the market. I mean, the big gap open on Monday made it tough for new trades, but we've had pretty good development, at least in my personal opinion. So I'm excited going into next week, and of course, I'm always excited to hang out with the crew.
Is Friday the 13th still a thing that people think about here? I know the girls outside, Matt, in the living room when they were doing school this morning, every one of them knew it was Friday the 13th, but they're like 10, 11 years old. Did you guys even think about it this morning?
I did.
I thought about Jason in space.
Is
what I thought about this morning.
I did too. That amazing bad movie, Jason in Space. No, Tim, I don't think it's as big of a thing as when we were kids, but when we were kids, it was all about Friday the 13th versus Nightmare on Elm Street, right? And I don't think we have that type of fear in our little ones this time around. They would be more scared like Contagion. Contagion for them would be like Friday the 13th for us growing up. But no, it's is it a thing? I don't know.
I think it's still a thing. The kids confirmed it. I think if we go on TikTok, I'm guessing we find out. Yeah, I bet it's still a thing. I'm just too old to always keep up on everything out there. Yeah. Maddie, how are you doing today on Friday the 13th?
Apparently, I've been doing a lot better than I thought I was supposed to be doing on Friday the 13th. But yeah, I'm doing good.
Doing good. All right, today's show, guys, we're also going to do some earnings roundup, some interesting names, Disney, Applied Materials, Cisco, a couple others, but really kind of a light news day. So we're going to start with technicals here. By the way, if you're out there, you're a veteran of our community, whenever you pop in the channel, hashtag Team Tackle right in the chat. Let's show our support for our community. And if you're brand new to our channel, subscribe, click the bell. We do this each and every day. Whenever the markets are live, we go live 12:30 p.m. Eastern Standard Time. And lastly, then we'll get started. If you're not yet a member of our pro membership in our tackle trading community on the back end, there's a link in the chat below. Come and see what we do over at Tackle Trading for all of our community. All right, let's start with technicals here, Matt. Yeah. S&P 500, a little tight consolidation the last 4 days after the Monday, which was really amazing. Really, that gap up gave it back. How are you reading this price action this week?
Well, I think you first have to start, and we've talked about this throughout the week, but we also talked about it on Monday. When we saw this very large wick coming back down, and like Frank says, that kind of threw a little bit of a wrench in the analysis this week. And what I said on Monday or Tuesday, I can't remember what day, is I said, if you're looking at that wick and you're saying that's part of the analysis, this is going to be a very, very difficult situation for you. But if you look at that, what happened on Monday, and you discount that like I do, then you're looking at this more as an overextended market that you're kind of expecting the market to form a little bit of a consolidation. You're kind of expecting the market to do a little bit of defense as that 9 EMA starts catching up to it. And what are we seeing here throughout the week? We're seeing a little bit of up, a little bit of down, a little bit of up, a little bit of down. What are we seeing in the headlines? Oh, market up on, this positive development, market down on this negative development, and most of it has been COVID type analysis this week. So that's going to happen when the market is in an overextended range. You're going to have a little bit of a battle, and a lot of times it does form consolidation, and that 9 EMA catches up to it, and it finds its footing and starts to run again. So that's where I'm looking at this market now from an analysis perspective. Let's first start with multiple time frame analysis here, and let's start on the weekly chart. over the course of the last 2-3 months, you've seen this consolidation forming a little bit of an M formation. The M does stand for murder. You have your, double top, double bottom. But what you never had, and which is very, very important, because continuation patterns and reversal patterns, and I think this is where it gets a little confusing to newer traders, is they're very, very, very similar. They're almost identical in the creation of the actual pattern. So when you're talking about the first step in a reversal, you're talking about slowing momentum. When you're talking about that in a continuation pattern, you're talking about slowing momentum. Double tops, double bottoms, all of those are very, very, very consistent when it comes to reversal versus continuation patterns. Now, what you're waiting for on those patterns is you're waiting for a breakout one way or the other. And so when you're looking at that M formation developing, you're looking at that bottom level, and a violation of that bottom level would be confirmation. But this exact same thing happens at resistance levels. So when you see this market as neutrality, and that's what continuation patterns and reversal patterns are, you're looking for a breakout one way or the other. And what that breakout typically does is it starts a new trend developing. And so when you're looking at these scenarios, they can be very difficult, but because what creates the neutrality is lack of consistency in the financial markets. You have some up, you have some down, you don't have consistency in trend. There's no consistent theme where the market can easily adopt to see price appreciation. And so it becomes a difficult trading environment. When it becomes easy is when you have trending trading environments. And that's what this breakout can represent. Now, I do think for confirmation purposes, on the weekly chart, we do got to clear 3,600. That's where we have the old wick over here, right in that ballpark of 35.95. So let's just give it a significant whole number at 3,600. But if you do break out of that level, you have to call that the starting point of a new trend. And so on the weekly chart, you're looking at this and you're saying, okay, I'm bullish, right? I'm a slightly lean bullish. I'm anticipating a breakout. That's on the weekly chart. Now, when you come down to the daily chart here on the S&P 500, you're looking at this a little bit in the short term as rising momentum in the short term with a little bit of consolidation this week. You're allowing that 9 EMA to catch up to it. So on the weekly chart, we're expecting that breakout is what we're doing. Now on the daily chart, you're starting to see the analysis form that would lead to that breakout, because what a lot of these short-term traders are looking at is they're looking at this market. They're not even looking at the weekly chart right now. They're looking at this daily chart and they're saying, okay, I'm not going to trigger here. There's no consistent technical analysis. I'm not going to trigger here. I'm not going to trigger here. I want on the daily chart, I want enough data so that we can start going down into this intraday chart. And let me come out just a little bit here. Highlight over here. I want enough data on this intraday chart of consistency where I can start to identify very easy breakout channels on this intraday chart. And so even though this week has been a little bit of a roller coaster from a news perspective, why the market's up on Tuesday, why it's down on Wednesday, why it's up on Thursday, so on and so forth. But what has been transpiring in the data underneath those daily charts is you're looking at some degree of fairly consistent data that you're seeing a double top right here at that 35.75 level. You see this double bottom form right there at that 35.13 level. And so even though the news this week has been a little volatile, and even though, one up day, down day, one up day, one down day, that's kind of been the pattern this week in the market. But from an intraday perspective, you're actually seeing some very consistent data. And why that's important is now all we're kind of waiting for at this point, the technicals are starting to get in line, right? If it consolidates on that weekly chart, there's nothing to see there. Nobody really cares. That will actually make the analysis even that much stronger. But the technical data is starting to line up, where those intraday traders, the day traders, are looking at that breakout channel, where the swing traders are looking at that breakout channel, and where the weekly position traders and investors out there, they're looking at 3,600 on the weekly chart. And so I do think that the technical data is aligning for a really good trading environment that could potentially set up coming into next week. And honestly, I think this is what you needed this week. I think this is what the market needed this week. A little consolidation after a very, very, very up and down roller coaster of not just the last week and a half, 2 weeks, but think about everything that we've been dealing with in the marketplace over the last 2 months. COVID and stimulus and election and economy reopening up and is value back versus, I mean, there's been so many roller coaster type analysis lately that I think the market consolidating for a week, showing some consistency in technical analysis on the intraday data to the daily data. I think the market at this point is waiting for some logical reason to trigger. Could we get that over the weekend? Maybe, maybe not. But I'm looking at this data this week coming into this Friday, and I'm saying this is exactly what the market needed this week. Now we just need to trigger above those resistance points.
Frank, how are you reading the price action here? Obviously a wonderful breakdown there by Matt. I agree with, everything you just said there, Matt. You've been on point with this technical analysis for a long time. Frank, how are you reading price action on the market right now?
Listen, I'm not going to top what Matty just said. I mean, I'm 100% behind basically everything he just said. My line of thinking, exactly. It's like he's in my head. So I think it's a great job, Matt.
Thank you.
But I really don't have much to add to that. I mean, it was pretty much exactly kind of how I'm thinking going into next week.
Good. All right. Well, let's flash through the other indexes, see if you see any relative strength or weakness quick, Matt, especially the NASDAQ particularly, but take a look at any of the ones that grab your interest.
Let's take a look at the Dow, and obviously Disney reported earnings here today, but the analysis on the Dow is very, very similar. The numbers of resistance on the trigger are obviously different on an index, but when you're looking at, strength in pattern, strength in analysis, pattern recognition, you're looking at something fairly similar. I would say the key difference on the Dow versus the S&P is you have seen a little bit of relative strength this week, not this week, but over the last couple weeks in the Dow, as that value play has started to come out a little bit, as the infrastructure conversation is starting to happen a little bit, even though if that little bit is mostly just in my head right now, but we will start having that infrastructure conversation. But a lot of the themes we discussed in the podcast this week is kind of pro Dow versus some of those other indexes. And so when you're looking at the S&P, I think the technical difference is, one, we're underneath that weekly resistance channel, whereas on the Dow, you're actually above that weekly resistance channel. You're still underneath that very, very important, significant, say it with me again, significant whole number right there at 30,000, which was the tick of earlier this week.
Hey, crazy.
So I don't think you can discount that tick on the Dow, whereas I do a little bit on the S&P. So even though the Dow is showing a little bit of relative strength on the S&P, I'm looking at the S&P right now as the leader here from a technical perspective. I do got a little bit of concern on the Dow at that 30,000 number, although you break out of that, you could see some euphoria. Keep an eye on that. That 30,000. I mean, these significant whole numbers, guys. Number. I mean, that one itself is significant, big number. Dow 30,000. I mean, people put it on hat type analysis, but significant whole numbers have been the number one support and resistance zone on intraday analysis, swing trading analysis, position trading analysis, investing in every different trader out there. Significant whole numbers have played a very important role post-pandemic, even in my opinion, more than moving averages, although the 90 MA does have an argument in that debate. So in terms of this right now, that 30,000 obviously just sticks out to me. You do got a similar pattern. You do got a similar trend. The trigger is not as clean here. Like I said, on the S&P, you got a very fairly clean trigger. Here on intraday, you're kind of all over the place. And even if you do get above that 29,556, you're still staring at that $30,000 level. So I do think I do think it's a little more clean on the S&P on the analysis, even though the Dow has had some relative strength in very short history. I do think the S&P is kind of what you're looking at here. From a NASDAQ perspective, you're still seeing this as relatively weak in comparison to the S&P and the Dow right now. We're still seeing this as if we were to rank the indexes, I would have the S&P ranked higher than the NASDAQ right now. Agreed. But it wouldn't be significant though, right?
Hmm.
I mean, what are we talking? 5 to 10 spot, Frank?
Yeah.
I
Yeah.
mean,
It would just be a little behind.
yeah. So if these were sectors, I'd say, okay, let's look at the S&P in the 25 zone, right? 25 to 30 zone. We'll have that debate later on today in the scatter report meeting. And in the NASDAQ, I'd say you're probably at a 40 here, where you're slightly underneath the breakout channel. You got a slightly different pattern. You've had relative weakness in comparison to the sectors in the Dow and the S&P. So I would have it ranked a little bit slightly underneath those other areas of the market right now. You're still looking at this as a bullish pattern, though. So I would just say the reason you would have a 40 instead of, say, an actual bullish ranking is you do have a double top here. If there was no double top over here, you would look at this as a bullish retracement, and you'd look at this as continuing this momentum. So there is some weakness in the NASDAQ chart that the S&P and the Dow do not have, and that's why it would be ranked slightly underneath the other indexes there. And then when you're looking at the Russell 2000, you are seeing an index. Small caps are obviously going to be economy opening up type themes, and small caps have been very, very, very good. But in small caps here, Tim, I think you got to start with a vastly different analysis in the small caps right now. Whereas on the weekly charts in both the Dow and the S&P 500, you're still underneath overhead resistance zones. When you're looking at high base patterns in the S&P and in the Dow Jones right now, very similar pattern in the Russell 2000. But the trend is different, and so you had some neutrality coming into this high base in the S&P, in the Dow Jones. Here, you're looking at this more as a standard bullish uptrend. Higher highs, higher lows, higher highs, and now you're looking at this as a high base pattern that could show a little bit of a dip, but that's not what we're seeing here. So I do think in the short term, based on trend pattern and momentum, you would have, and this is not, I don't know when the last time I said this, but it's probably before October of 2018. I would probably have the Russell 2000 ranked slightly higher than the S&P right now. And the reason is very simple. One, you're dealing with a bullish uptrend that has momentum, that has relative strength. You're dealing with an index that the themes that are developing in the market, and these themes will develop over months, not over days, guys, especially when you're dealing with presidential, new presidential politic type themes. These develop over, the first 4 months of next year. But these themes that have been starting to be embraced by the market and developing by the market and adapted by the market are pro Russell 2000 type themes. And so when you're looking at this from the theme-based discussions we've had this week, when you're looking at this from a technical perspective, when you're looking at this from a vaccine perspective as well, you obviously can understand why the Russell 2000 is showing relative strength in the short term. The ultimate question I have is, can that last? Because again, this is the first time for me that I've actually started looking at the Russell 2000, which can be a leading indicator for the Dow Jones and the S&P 500 and even the NASDAQ to a lesser extent. But it can be a leader in the pack, both on the bullish and the bearish side. You're seeing increasing momentum here. Can that last? If the Russell 2000 strength can last, this market's going to be a buyer's market. There is no doubt in my head on that. Now, for me, I'm looking at this 1750 level. We're currently pinging in a 1733. I'm looking at this 1750 level on the Russell 2000, and for the most part, I am discounting wicks. But as you can see here, you got a very, very, very clean trigger right there in that 1750 ballpark. If you do get above that 1750, there's nothing really stopping the Russell 2000. Not until it gets into that 1800 level, which would be some fairly decent price movement in the relative short term. So the open question I have coming into next week: can the Russell 2000 continue the strength that it has been showing over the course of the last week and a half, 2 weeks, but really over the course of the last 2 months as well? Can it continue to show that strength? And if it does, can the other major markets follow in that direction? And the answer should be a yes, but let's wait to see that.
Yeah. And Frank, are you seeing the small caps here the same way? I'm with Matt. I think some of the storylines, the themes around the market that have been developing for the last 10 days or so could benefit small caps completely. What are you seeing the Russell here as?
Yeah, I mean, it's what's really cool technically about the market right now is you're getting things lined up nicely, right? You get the S&P and the rut to potentially break out, followed by the Dow right behind them. That helps give it the momentum to push through that 30,000. I would imagine in that scenario, the NASDAQ is catching up. So I kind of think about it as a stack, right? Where one breakout, hey, the Russell broke out on Monday, and then the S&P follows through, and that's kind of how I'm looking at it overall. But I do agree, seeing the movement. We all know that small caps can move when they get going. They can definitely get some momentum behind them. Hey, anytime anything's breaking resistance, you know me, I'm going to be paying pretty darn close attention.
Tyler loves small caps, right? I mean, that's his thing. I mean, that is what he does. He loves investing in small caps. He created a system on cash flow condors over the Russell 2000, a small cap index. I'm more of a NASDAQ and an S&P guy. What do you guys?
Yeah,
if you had to say.
I'm large cap guy. I like large caps.
Yeah, I'm a large, big mid cap guy.
Yeah, me too. But I think the reason I analyze the Russell 2000 is that does give greater confidence in the analysis on the blue chips and the bigger stocks out there, or it can throw a lot of cold water on it. So I even though I am a S&P and a NASDAQ type of guy, the Russell 2000 analysis does give me a little greater confidence in those other bigger, broader markets.
Mm-hmm. Yeah, I agree. I mean, and plus it confirms some of the storylines we've been thinking about, right? Our general reopening, some of these value stocks, some of these U.S. dependent companies, that kind of stuff that took off on Monday. So yeah, I'm with you as well. And I think it's kind of all lining up, stacking itself together here a little bit. Matt, let's flash through.
Can I just say this? I love light news days. I love light news days, especially in the halftime report, because I can just geek out on technical analysis.
Well, it's perfect to have Frank here on a light news day.
I just love it.
Because then we can just do charts. I mean, that's exactly right.
Love it.
That's right. Quick run through some of the commodities and currencies. There's not much there to update, Matt, quite frankly. And I think the most interesting stories today are around individual companies, earnings reports, and some of the charts. So give us a quick analysis on crude oil, gold, the dollar, and Bitcoin.
There are better technicians than me that can find an edge on crude oil, because I cannot find an edge on crude oil.
I don't know. Let me try to get you on something. You got 3 red candles back into a rising 9 EMA.
Don't care.
Yeah, I don't care either.
This literally, there is nothing you could say, or Frank or Cody or anybody that would have me start caring about crude oil. And the perfect analogy that I'm going to give you is something that most people will not care about or understand, but Frank will get it. Me and Frank were talking about trading Hayden Hurst, the Atlanta tight end, for who was it again, Frankie?
Noah Fant, the
Broncos
tight end.
And it's a very even trade, right? And Frank asked, well, why do you want to trade Hayden Hurst? I'm like, I just don't like him. I don't trust him. I don't know. It has nothing to do with him. I just don't trust him, right? Crude oil, I've lost trust. I don't trust crude oil. I don't want to touch crude oil. The same way Hayden Hurst is sitting on my bench for weeks and weeks and weeks is the same way crude oil is going to sit on the bench for weeks and weeks and weeks and weeks, because I have zero confidence. And Hayden Hurst has to show me not 1 week of good behavior. Hayden Hurst has to show me multiple weeks of good behavior. Crude oil, you got to show me multiple weeks of good behavior, because I honestly don't care you exist right now.
There's so much of that fantasy football conversation that I could bring in and extrapolate on right now. Like the difference between fundamental conviction versus a swing trade. The guys that you're willing to just leave in there every week, no matter what, because you believe in them, Frank.
It is true. When I talk trades in our fantasy football league with the traders, I talk a little bit different than when I talk with the not traders. So,
Tim and Frank, you'll get this. Roy E. Williams is my United States still.
There you go. Yeah, I do get that. That's not a compliment.
Oh, Roy. Well, he had his days, right? So does U.S. Steel, definitely. No doubt.
And I still love them both, just with massive emotion.
Different types of emotions.
I am
All
not rational when it comes to Roy E. Williams or U.S. Steel.
That's funny. All right. Next one here, Matt. Gold, the dollar, and
Yeah.
Bitcoin. There's not much in these charts, by the way. So if you see something, you let me know.
I don't. I see nothing. I see 1850 holding in the gold chart, just consistency of what we're seeing on the overreaction from Monday. Nothing really to change in the short term or the long term analysis there. When you're taking a look at very quickly the dollar here, UUP, you're going to see a little bit of the same thing here. Really, kind of nothing to see. You know, Tim, how long have I been saying the dollar's neutral?
It's
2 months now,
yeah.
about
Yeah.
2 months now.
Mhm.
And every time it broke out here, like when it broke out here, I said, nope, don't overreact. It's neutral. When it broke down here, what did I say? Don't overreact. It's neutral.
Yep.
When it broke back up above here, what did I say? Don't
Same
overreact.
thing.
It's neutral. And when it broke down here, what did I say? Don't overreact. It's neutral. Dollar's neutral. So until the dollar does change that neutrality, it's going to be neutral. And anything that happens on the daily chart isn't going to give me any concern one way or the other. You got a fairly significant range here between 25.50 and that 25 ballpark right here. Now, if, and this is an if, but if over the course of the next week or 2-3 weeks, we start to see consolidation at the lower end of this range here, at that point, you're talking about a bearish breakdown on the dollar. I do see that from a fundamental perspective. Let's see it from a technical perspective before we start analyzing it, though. And in that scenario, gold will do very, very, very well. But that's premature. Right now, you have that range between 25 and 25.50. Let it fit within the range if it ever breaks. And you know, there's no trade to the bullish side here unless 25.50 is violated. If 25.50 is violated, again, different form of analysis. Right now, let's see how it responds to the bottom end of this range over the next week or two. Right, and that's really the only thing on the dollar. From you know, gold, again, gold sitting at the lower end of its range, the dollar sitting at the lower end of its range as well. Something's got to give in that analysis to a certain extent. Does the dollar give or does gold give? And so for me, I still think, you know, gold is that one you want to have here. You know, like, think about it like this. If you were to think about it like this, do you want to own gold as a trader or the dollar as a trader? Okay, if that's how you had to think about currency versus commodity. And let's look at it on a weekly chart. So here is gold on the weekly chart. Okay, this is your appreciation of money, and this is your dollar on that same weekly chart. So the question is, which one do you think is going to give? Do you think support in the bullish uptrend is going to give, or do you think support in the bearish downtrend is going to give? And I don't know about you boys, but I'm going to bet on support in a bearish downtrend giving far more than I'll bet on support giving in a bullish uptrend.
It's a bold statement, but
Yep, I know. Breaking news, right? Breaking news, bet on support in an uptrend. But you know, I mean, when you think about it like that, you're like, yeah, I don't want to own currency.
Yeah.
Gross. Give me Bitcoin. Like, give me anything.
Yeah, seriously.
Right. Unless it starts with give me the euro, and then it's like, no, I don't want the euro either.
Don't want
and
the
then
euro either.
Give me the yen. No, I don't want the yen either.
Don't want the CAD.
No, give me the CAD. Nope, don't want the CAD. Nope, don't want any currency. When you think about it like that.
Yeah.
So no, but yeah,
but give me Bitcoin. You can give me Bitcoin. You know.
Yeah, you know, you can definitely give us Bitcoin, but I'm just saying, when you're looking at gold, let's not overreact to what happened on Monday. The fundamentals are still there and the technicals are still there. And I think it's going to take a few days to shake out what did happen on Monday. But again, if I had to blindly bet here, you know, shot in the dark, I'm going to bet on gold over the dollar.
Mm-hmm.
I like my chances.
Yeah. I'll take that. I'll take your side.
Yeah. I like my chances.
I like that side of it.
Now, specifically regarding Bitcoin here, guys, Bitcoin breaking up above that 16,000 barrier. We talked about this. We've talked about Bitcoin more in the last 5 months than we've talked about Bitcoin in the last, 4 years on live content. But 16,000 has been violated here. That you have to call that confirmation on a short-term trader perspective, and you have to be looking at triggering as a short-term trader here. I said earlier this week, I would love a couple weeks of consolidation, tighten that range up, give us a nice little, analysis where we can see that pop to the top side. But you're not going to get everything you want in the market. And with Christine Lagarde saying yesterday that, you know what, the ECB, she said the quiet part out loud, the ECB might be looking at a crypto. Hey guys, guess what? We know all the central banks are looking at cryptos, digital currencies. Yeah, we know what you're doing, guys. We know it.
Within 5 years, they'll all have it.
We all know it. And guess what? Consumers who fear that, you already spend 95% of your time spending digital money versus real money always. Yep. So, if you don't like it, start hoarding some cold hard, some of that cash. Actually, I'd say hoard gold, but I digress. Or silver coins. Silver coins are still really, really good. Bitcoin here, you got to call that a breakout in the short term. I would love to see a little bit more consolidation. We may not get it. And this is kind of the reason why. I know it is a very, very narrow, tight range here on the candle, even though that narrow range is still $500 on Bitcoin. That's just kind of funny to me. But what you see here on that range to the downside, you saw some intraday analysis to the downside. Where'd it come into? That 16,000 barrier. That 16,000 barrier is already acting. And I know this is premature. And I know this is, when you're talking about 16,000, you're talking about 16,000 for the last couple of years. And you only have 1 minute on a chart, but that 1 minute is happening on a level that we feel is very, very, very important. So can 16,000 hold as a support level? Let's see, but I do think the traders out there right now are looking at the high of today on Bitcoin, and they're looking at the low of today on Bitcoin, and they're saying, you know what? Let's momentum trade this, and let's see who's happy at the end of the day. Tight stop loss under 16. Take very, very, very little risk. Expect some pop up to the top side. You know what? There's a risk there, obviously, but there's momentum there as well. So I could see that happening here. Is it, again, would I rather have a couple weeks? Yes. Would you rather had a big update today? Yes, only if you had your trigger above yesterday's high. Today, I'm looking at this doji candle showing a little bit of defense. You have so much positive momentum from a psychological perspective here happening on Bitcoin, guys. I mean, you have everybody and their dog starting to embrace this to a certain extent. And unlike 17 and 18, Tim, where I was like, I hate consumer America adopting it. The reason I hated consumer America adopting it the first time was the central banks and institutions had not yet stopped their fake war. And I'm serious on that. Their fake war on crypto. They're now embracing it. Institutions and central banks are now starting to embrace it. And now the consumers are coming on the back end, giving it a little bit more of a psychological belief in it. So it is aligning fundamentally and technically. I would have loved a little bit of more consolidation, but I do see a trigger above the high of today with the stop loss under 16. And if it comes back under 16, the holders aren't going to care.
Frankie, how do you read this chart right here?
Because I mean, basically, you're just whatever your momentum style is, whether it's waiting for a deeper pullback like Mark, or going in off of intraday, 1 minute, 5 minute, 15 minute hourly breaks, candle high, candle low, like Maddie was talking about. I mean, when you get a head of steam on anything, certainly Bitcoin, you don't want to get in its way, right? And so it's really about how are you comfortable trading it? What systems do you use, right? I mean, I wouldn't fault anybody as long as it was within their rules for whatever they were doing, to be quite honest with you, with the momentum that they have following that breakout.
Yeah, I'm with you. Maddie, let's do the earnings roundup next if we can. I think there's 4 or 5 companies grabbing my attention. And Frank, I know you've got some charts for later in the show. Is that right?
Sure, absolutely.
Yeah, I know a lot of people get excited about coming on in here and getting Frank's charts on a Friday. By the way, if you're out there watching our show right now, appreciate you guys. Hashtag Team Tackle. If you've not done it yet, get those thumbs up. Let's get the word out here on the show here today. Get the analytics up. Get more people to come on in and join us here in Tackle Trading. Matt, let's go earnings next if we can. And any of the ones first. I know there's 4 or 5 that grabbed your attention. So.
Oh, I was just talking to Blake on whether the U.S. will adopt a digital coin. Yeah, I do believe that, Blake, and I would love to have a conversation further on that. But Tim, what was your question?
Earnings now. Earnings.
Earnings
Earnings
roundup.
roundup.
Yeah,
Yep.
let's start with the big dog name out there here today, and that was Disney. Disney comes in, guys. Disney's showing a little bit of life over the course of the last month or so. Gap up last week on the obvious vaccine news, and why that is so important for Disney and why Disney held up when the market didn't is very simply this, guys. Disney in their earnings numbers here today, they came in at negative 20 cents a share versus the expectation of negative 68 cents. Now, that is a very, very healthy beat on EPS numbers. Revenue came in at 14.7 billion versus 14.3 billion. A fairly decent beat on revenue numbers. Now, that was down 23% year over year on their revenue numbers. Now, why is this all important to Disney? When you're looking at the revenue breakdown of Disney, most of that revenue breakdown is now coming from reoccurring revenue, subscription services, whether you're talking about some of their traditional models, i.e. ESPN and all those traditional, media models, or whether you're talking about Disney Plus here. Disney Plus came in at a whopping 73 million paid subscribers, guys. This is what is so important for Disney. And I want you to think about this. There's a lot of analysis that Disney is this cyclical stock, that it goes up as the economy goes up and it goes down as the economy goes down. And a lot of that analysis is based on movies, theme parks, that type of traditional entertainment. Well, Disney has had literally almost all of that revenue, from not all of it, but a significant portion of that revenue just wiped out because of COVID. Theme parks have been shut down. Movies have been delayed. They had to take Mulan, which was going to be their big blockbuster this year, billion-dollar franchise out there, and they had to release it direct to Disney Plus. And so when you're looking at Disney's numbers, you see the gap up on Monday that's looking at this. And now that Disney has this foundation, this bedrock of reoccurring revenue, which is so vitally important for the Amazons, for the Apples, for these types of companies, now it has this foundation of cash flow. And think about it like this. I know our community is going to understand this because our community has that cash flow mindset. When you have a foundation of cash flow, everything gets a little easier out there. The analysis, the business decisions, the mergers and acquisitions, recession protection, insurance, everything gets a little easier out there when you have that foundation of cash flow. That works out for that life gets easier with the foundation of cash flow. When you have that foundation of cash flow and you act as the business or the investor class, you can go out there and do other things that other people simply can't do, from a lifestyle perspective, from an investment perspective, from an opportunity perspective. Take a look at that and think about that as an individual. Now think about that as Disney. Disney now has 73 million paid subscribers, 73 million paid subscribers. Their range on paid subscribers for 2024, last I checked, we're still in the nightmare of 2020. So 2024, they were expected to have 60 to 90 million paid subscribers. They're already at that mid-range of 73 million. They have a beautiful foundation of cash flow now with Disney Plus. And their earnings numbers this go around didn't, like, their parks were disastrous. Their entertainment, their movie division, all of that was disastrous. COVID, we start talking about COVID in the rearview mirror coming into the mid 2021, second half 2021. Everybody thinks it's going to be a choppy economic range between now and vaccine, but after vaccine, Disney has that foundation of cash flow, and then you start opening up the floodgates of the Disney parks and the movies and everything else that makes Disney this amazing brand awareness company. I'm starting to talk myself into investment here on Disney. I've been out on Disney for a while. I'm starting to talk myself into it.
Frankie, what are you seeing in the chart here? Obviously, you got to love the subscription numbers like Matt's talking about, Matt. And the fact that they are, 4 years ahead of their projection to hit those numbers is really
impressive.
incredible. And it made me go look up when the Mandalorian season 2 starts. Apparently, it already did.
It already did. Where are you at?
Where am I at?
Where are you at?
I guess the election might have grabbed my attention over the Mandalorian release, but I'm not certain.
Where's your priorities at,
I
Tim?
was gonna say, come on now.
I'm gonna go watch it. I loved the first season, by the
I
way.
enjoyed it. Yeah, I really
did
enjoyed
enjoy
it.
Frankie, what are you seeing in the chart here? Disney used to be, it was a simple question and answer. How do you trade Disney? You don't, you invest, right? Or you do cover calls, maybe.
You don't trade Disney.
Right. What are you seeing in the chart here, Frank?
Not much. I mean, I could see a scenario where, eventually we develop into some sort of breakout at, that 150-ish range, and maybe something develops between now and then. That's certainly well within the realm of possibility and probably likely to happen. But I don't really see anything on the chart from a charting perspective that gets me really excited. Like the gap, sure, but man, I'm going to run after that, working into those all-time highs. It's going to need to cook a little while for me. The investment thesis is strong. Matt's talking into it as well, but the trader's thesis right now, I think, is leave this alone, let it cook. Something will develop that you potentially like in the days ahead, but for me at least, it's not developed today.
I don't think you invest in Disney on a breakout on momentum. I just don't think so.
No.
I think you look at dip mechanics on Disney, and I don't mean to buy the F and dip type mechanics.
Right.
I mean value investing mechanics is what I'm talking. Warren Buffett value investing mechanics. I'm not talking technically by the dip.
Generally, I would agree with that, but I will throw a caveat. The best trade I've ever seen and been involved in was the Disney $44 breakout back in, I think it was like 2012, because they had tested that resistance back in 98, like 2000. I was smacked down at it. I mean, it was such a beautiful breakout on the monthly chart that when I see that happen again, I'll always be cool with that
but
setup,
for that to happen, I mean,
well, yes, that's get back to me, in
6 months.
Oh, 6 months, 6 years.
It might be a while. It might be a while.
But yeah, I would agree. It's more of a dip buyer, and it definitely.
I think you look at it fundamentally, and you look at it from a value analysis perspective.
Yeah, and in some ways, I think you can kind of look at it, as silly as it might sound, as you look at crude oil, where when it really has a strong trend and a lot of momentum behind it, you can kind of put those swing trading philosophies to work on it. But if it doesn't have all of those, boxes checked, it's a tough trade, at least in my personal opinion. I'm with you.
Next.
I'm going to go to Applied Materials next here. It came in at $1. Applied Materials tackle 25 semiconductor stock, and Applied Materials, quite frankly, has been on the tackle 25 for what would this be? 4 years now?
I think at least 4. I'd have to go back.
15, it's 16, 4 or 15 or 16. I can't remember. 15 or 16, it's 4 or 5. But it's one of those I think it's 16. But it's one of those semiconductor stocks that we just really, really, really like from a cash flow and a fundamental perspective. And they did not disappoint here today. 125 on the EPS number versus 117. Revenue expectation was 4.6 billion. They came in slightly north of that at 4.7 billion. So a slight beat on both EPS and revenue numbers. Revenue came in at 24.5% year over year, and they did see a slight increase, just a slight, but it was a legitimate slight increase in guidance. Nothing. And again, this is not necessarily a swing trading stock either. It's a tackle 25 stock. We usually don't put swing trading stocks on a fundamental cash flow list like the tackle 25 stock. More of an investment, more of a position, definitely a cash flow. When you're looking at the fundamental data behind it, there's nothing that changes your conviction in this company. Number two, when you're looking at this from a technical perspective, you're seeing this very similar to what you see in the marketplace itself. A lot of momentum in the short term, little bit of consolidation in the near term. When you're looking at this on a little bit of a longer term weekly chart, you've already broken out of that 70 barrier. Now you're acting 70 as a little bit of a support level. So not a swing trading stock, but you are looking at a little bit of momentum, and the data we saw in the earnings numbers wouldn't shake anybody's confidence in the quality of this company.
Back out to like a 10-year chart if you can, just for 1 second. I mean, look at the performance since the middle part of this decade, when it just started taking off. And now, Matt, that triple top breakout on these long-term charts, again, not a swing trading, setup, no question about it. But if you're a long-term investor, there's nothing that's happened here with AMAT that you're down on. You got to be excited about this long-term, don't you?
No, and especially when you're talking about what we're seeing in terms of the market, but here in Applied Materials on the weekly charts, you're actually breaking out of that triple top area at $70. You're playing defense at $70. You do have a little bit of a higher bias on Applied Materials from a directional perspective than you do the market. So a little bit of volatility with it in just over the course of the last week and a half, which we've seen in a lot of the market. But again, when you're looking at this from a longer term perspective, nothing in the data should shake anybody's confidence in the quality of this company. Number two, when you're looking at this from a technical perspective, you got to be looking at that $70 mark and saying it is a very, very big positive that you broke out above 70, and it's giving you a little bit of confidence that it did test 70, a little bit south of 70 or earlier this week, recovered a little bit here on the back half of the week. So no, you're looking at that 70 and you're saying it's positive. You're looking at the earnings numbers. You're saying, yeah, I still like the company.
Beautiful. All right, next.
Last one's, well, two more actually. Let's go ahead to Draftkings DNKG here. DNKG. DKNG.
Yeah, I had to remember Donkey Kong. Donkey Kong's how I remember it.
I did. Donkey Kong, Donkey Kong. Let's take a look at Draftkings very quickly, because there is a little bit of concern in their data.
Mm-hmm.
Number one, came in at negative 98 cents a share versus the expectation of negative 63 cents a share. So they were expected to lose money. They lost money. Revenue came in at right in line at 132.8 versus 132.2. That's fine. You know, small companies, and Draftkings is a small company. I know where their market cap is. They're still a small company. Market cap and company and size of company are two different debates there. But when you're looking at a company that spent $200 million on advertising, and they have $130 million in revenue on that advertising, and a vast majority of them are freemium type products, which means no paid products. There's some concern here with, and I look forward to having Mark on the show next week, because I want to talk to him about if he is concerned there. We all knew Draftkings spent a ton of money. Everybody knew that. That's nothing new to anybody. But when you actually, and we all knew they spent more money than their actual revenue coming in. But when you actually see the numbers, it just makes it real to a certain extent. And when you see a company that had total revenue, not profit, total revenue of 132.8 million, and they spent over 200 million in just advertising, that model's got to adjust. Somehow they have to get their freemium products into paid services. And right now that's, as somebody who has some experience in this, that's easier said than done. It's far easier said than done. So in terms of this, there are some concerns there with Draftkings from a fundamental perspective. Now, obviously, you know, some pro Draftkings analysis would be able to look at what states are doing around the US right now in terms of legalizing gambling and so on and so forth. Technically here, the reason I bring up the concerns probably is I am looking at Draftkings technically here, and not as, you know, I do have a bullish opinion of Draftkings long term, and I guess maybe that's why I bring up the concern as well. But I'm looking at something technically where you've had a very, very deep retracement on the weekly chart. You're testing those, you know, very, very significant support levels at $30 and $35 respectively. You're now reclaiming those moving averages. And even though I don't support the upward movement in price here today, up over 5% from a fundamental perspective, I'm looking at that 45 level and I'm saying, listen, if you can close above 45, you should see some price appreciation. I have concerns fundamentally. I'd like to talk to Mark about, see if he has those same concerns. But from a technical perspective, do you guys get a little excited for potential breakout here at 45?
I like this a lot, actually, especially on that weekly chart. Obviously, the daily, I mean, it's been volatile, Matt. We remember the storylines, you know, after they IPO'd coming out, they've been in the consciousness all throughout the entire year. You guys know I'm biased on Draftkings, and I've got a bullish assessment to it and a bullish position, just from a long-term perspective as an investment, Matt. So I do believe in the themes around Draftkings, even though the fundamentals are concerning. Technically, though, even short-term, Frank, is there a trade here if you were looking to trade it?
a very aggressive one, I would say. For the first time in quite some time now, we broke resistance, right? That is the first time we broke resistance since back at the end of September. It's hard to say that that's a bad thing. For me, I think it's a little early. What I would like to see is traders take this breakout, push us through that 50-day moving average, and look at the next pullback as the potential trading opportunity personally. So for me, I wouldn't be interested in this swing, if that makes any sense, but I'd be rooting for this swing. And if I were to get a pullback, if we could take out that resistance or that 50-day moving average, which could be resistant, I'm not overly concerned about it, but it is there.
You're saying, Frankie, I'm not willing to jump in first, but I will jump in on the third or fourth, right?
I could see a scenario, yeah.
So instead of jumping in on the hypothetical scenario that a trend may develop, you're looking for the retracement to confirm that trend actually developing.
Exactly. I want you to go first, and if it works out for you, and
nope, I'm not. You talked me out of it.
So
nope, I like your analysis better.
But it is a positive sign. I mean, these are the first positive signals technically we've seen since that pullback developed. And so if you're, following these guys in your watch list, you have to like that development.
That daily chart, when we switched it to the daily chart, I didn't like the price action. I like what Frank's talking about. On the weekly chart, trigger above 45 on a position makes sense to me, but I do like what Frank's talking about a little bit more. You got some choppy action on the daily chart. You got some fairly significant resistance on the daily chart at that 50-day moving average. You got a nightmare scenario on a trigger, above 45 because of what happened on the cash open here today on Draftkings. You got overhead on the 50-day. Yeah, I like Frank's analysis better, much better.
Mm-hmm. Okay, next.
VIPs. I suppose always the VIPs. Reformed Tackle 25 members.
Yeah,
they were reformed because they got crushed and then they got better. VIPs, I'm not happy with you. No, VIPs got removed. Trade war concerns. That's why the VIPs got removed. But VIPs, one of those. For those of you not familiar with the VIPs think Amazon light China. Just think about that. VIPs comes in at 24 cents a share versus the expectation of 27 cents, 3.4 billion against the 3.1 in expectation, 24.4% revenue growth year over year. And they did have a slight increase in guidance. I have zero desire to touch this daily chart. But, however, give me another couple weeks of consolidation on a breakout 24, Frankie.
Exactly. If this can cook, I'd love to see it have some time, at 24, maybe between 24 and 22, just kind of the way it looks right now, at least, develop into a breakout, say early next year. Yeah, I could absolutely be interested in that. But I agree, right now it does need some time to cook.
I also need to see some confidence in Chinese tech past a week without getting some type of just underlying, just thought in my head that China might blow up. Right. There's some variables here between now and January. So I kind of want to see a little bit of that in the rearview mirror, to be honest. But the VIPs, I am looking at the VIPs next year if we do see a little bit of consolidation and plays defense, supporting this trend that's developed in the last month.
Any more earnings, Matty?
Yeah, lots, but none I want to talk about. It's Friday.
Don't need to. Yeah. And plus, why do the people show up on Friday? They love our
Frank.
analysis.
It's
no
Friday.
question about it. They're here for Frank.
Wait. They love us. Yes.
But
nobody said that.
I was going to give it the but.
Frank.
They want Frank.
They want
100%.
Frank.
I don't know if that's true, but I will. I'll act as if it is.
All right, my friend.
True, buddy.
Let's work through some charts here, Frank. I actually did my scanning this morning as well, Frank. I'll be interested to see what you grabbed.
Hey, Frank said he doesn't know if it's true. Team tackle. It sounds like Frank's has a little self-confidence issues right now. We know it's true.
Listen, it could be a tie. It could be a tie.
Team tackle. No. It's not a tie. We know it. It's not time. We love Coach Frank and everything Coach Frank brings to tackle trading, onboarding, to tackle trading as a coach, to tackle trading Twitter. Frank, oh man, our community loves you. Come on.
I love our community right back. It's my pleasure and privilege to get to hang out with them. So, all right, Tim, I'm going to give you Under Armour first. You can go
Okay,
UA
let's check
or
it out.
UAA, whichever.
So these are going to be some of the picks we're debating later this today, right?
Mm-hmm.
Yep.
Okay, so for those of you who don't know, later today, as we get ready for the weekend, we do our scouting reports for the pro members. So if you're not a pro member, go out there, sign up for a 15-day free trial. You can see all the analysis in those scouting reports. But what we do in the scouting report meeting is all the coaches bring their picks, their stocks they're looking at for the next week. We break them down, analyze them, and then we build watch lists. And any coach of all the coaches of tackle trading has 100% veto power. So let's act like this a little bit of the scouting report meeting. Let's give them a little bit of a preview,
give me some
okay?
vetoes. Yeah,
And
sure.
Tim, I want you to act like we always act, and I will act like I always act without the colorful language.
Mm-hmm. Okay, so PG version of what we.
Gino's not here. We don't have to worry about some of that PG-13 or R-rated analysis, but yes, PG analysis.
Very clean, nice pullback back into the moving averages here, Frank. I like this setup quite a bit.
I've been very happy with these guys since the reversal breakout at around $10. No reason in my mind to not like what we're seeing. We really have a fairly clean path into that 15-20 range, at least that I'm seeing. So risk to reward should be pretty solid. I like the movement here today. I think some folks might call that a confirmation candle.
Do you have any concern in the slowing momentum behavior of the trend here? Because you do have increasing momentum here, followed by decreasing momentum here, very similar pattern here. Does that change? Does that throw any water on you guys loving this pattern?
Not for me, because there's context there. That one red candle that started this new pivot to pivot move was earnings, and then the gap out candle was Monday, and we know the price action this week. Mm-hmm. So
yeah, I'd agree.
For me, it's a no.
Yeah, I would agree with Tim.
Okay,
it makes there's legitimate reasons, at least in my head.
I'm with you. But when we detail it, let's just make sure that targets have to be conservative here, right?
I think that's fair.
You got slowing momentum. Let's just be a little bit more conservative on where we think the stock can go.
Yep. I think that's fair. Okay. Next up, a little bit of a different look. General Dynamics, GD.
Saw these guys too.
Like these guys a lot personally. One of my favorite setups going into next week.
The first question I would have, Frank, is does R to R work if you can map out a swing trade? I mean, are we going to the pivot at 155? And if so, can that math work itself out? There's some detail in there that we'd have to look.
Break's got to be about 151.5. So I mean,
you got to take out that you got to take that resistance out at like Maddie said, what 151.5. I don't think there's any reason to believe if we do that we're not getting to that old pivot. So I think that's a very sensible first target. I'm multitasking here and seeing what that's going to look like. If we were to use yesterday's low for our stop loss, Tim, and getting in above that high, we're at 1.6 to 1. So on our if that is in fact our first target, if it's not, if that's our second target, we'd have to go intraday to get to where we want it to go. But I personally believe that the risk reward is going to be there on this setup myself.
Yep.
There's been a lot of strength in industrials recently, guys. I mean, this is looking at the chart on the Dow Jones. I mean, we talked about it today in the halftime report. Basically, the Dow Jones showing relative strength in the short term. General Dynamics is performing with the market and performing with the pattern so far this week. But over the course of the last 6, 7, 8 months, it's been a fairly significant underperformer. Do you guys have any concern there that it is still underperforming, or is this one of those, let's bottom up fish here, breaking out of the 200? Where's your head there?
That doesn't concern me personally, because now that I am seeing the signals, and assuming we can actually follow through, right? We haven't done that yet, and it's not a guarantee that it's going to happen. For the first time, we've just seen some signals. And so like a lot of things, I mean, it's kind of been the market, right? Things have either trended or have gone sideways. And I do think, if your signals are there in, these stocks in these different areas that have went sideways, be it some of the financials, airlines, industrials, defense, whatever it might be, if your signals are there, I think that you can take them personally.
Yeah,
All right,
I think there's the map for the quick potential trade, but man, give me a weekly chart. I would probably veto this, thinking we have better potential reversal setups. I don't love the weekly here.
So not like the weekly. All right.
Would you rather do General Dynamics or Boeing?
Oh, that's an easy one for me.
But you hate Boeing.
I think the technicals
Boeing,
are better on General Dynamics too, but yes, I do hate Boeing.
It would be a veto for me as well. I think with the strength in industrials, I think when you're looking at the industrial market itself,
to shine away from the defense type of companies.
Yeah,
because that's a defense thing, right?
I do have a little bit of shyness there in that, but in these pure like industrial plays, look at the strength, look at the pattern, look at the cleanliness of the breakout channel here. I like it because you're seeing a little bit something very similar in the short term here, aren't you? You're seeing that momentum come in. You're seeing the base there versus something like a GD, a General Dynamics, where you're seeing that same type of pattern here, the same type of consolidation. I just kind of feel like if you're going to swing trade here, you do it in strength.
Fair enough. Yeah. Fair enough. Fair enough. All right. Let's take a look at DD, DuPont de Nemours. Broke out.
A little snapback rally on the breakout.
Yeah, pretty straightforward, right? Gapped up above the breakout point on Monday, pulled back, dojied yesterday, green bar here today. Pretty textbook type of pattern, right? Nothing fancy about this type of a pattern.
For me, the analysis starts with the breakout of 60 on the weekly chart here. DuPont has severely been underperforming the market, but we have been seeing these bottom feeding stocks that have significantly underperformed the market start to pick up a little bit in recent history. Can this be one, right? That's kind of the question we're looking at here. I like the breakout on the weekly chart of 60. I like the defense on the snapback retracement we saw earlier this week, and I love the candle from yesterday to today. Got a little bit of a chop here, but that's the market this week, right? Mm-hmm. You do have a little bit of a chop, but I love that potential breakout of 60, and I love that snapback coming into the last 2 days. I'd like to see it against some of the other picks before I give that official approval, but it definitely is moving on to the next
maybe a next rounder.
round.
Yeah, we would discuss it. Yeah.
Sure. And another chemical company, different look and different style, specialty chemicals in ALB, breaking out of a little bit of an odd, but a little bit of a high base that has developed over the course of this
Say
week.
this company's name for me.
ALB.
ALB.
Is it Albemarle? I mean,
no, it's ALB. We're stock guys. We speak in symbols and code. No,
it's true. Someone sent me a text a couple of weeks ago talking about Raytheon, and I just responded RTX to him, and they just confused them. They weren't a trader. So RTX.
You don't ask people from Emory and Carbon County, Utah, to pronounce these names, Tim. That's just rude.
I have misspelled apples on my grocery list before.
All the time.
So many times.
Walmart, like I'll literally text my wife, will you go to WMT? And she always, every time, what is wrong with you? It's Walmart. What are we talking about? I like the momentum here, Frank. I like the high base. It's one of those ones where you kind of wanted it to kind of
I was hoping it was going to be
underneath that breakout channel, right? And so the first thing I thought about, because we've done this so long, right, is the first thing I thought about was Frank would have loved this to stay at doji underneath 120. Like that's what he would have loved to trigger. So I do think you have to treat this momentum style, right?
I agree.
And which is fine. I mean, it's got a lot of momentum behind it. You just got to trigger in above the high and get a stop loss underneath the base. So you take a little bit more risk there, but you have a higher probability. I can't say no to a momentum breakout that's clean above 120. I mean, you just have to, in the report itself, you just have to talk about this has to be treated as a momentum play.
Mm-hmm.
Yeah. It is one of those that I was hoping that I heard a beep a little earlier. It might have been them.
Yeah.
So I always hate when I get the beep.
Like, seriously, I have to get the alert on a Friday at 11:30. Literally, really?
Yeah, that's but hey, that's the way it goes,
beep at
right?
me on Monday at 9:45. You can't do that.
Exactly. That would have been nice, right?
Yeah.
So let's see here. Let's take a look at Ruth. Got a few restaurants for
There were
you
a
guys
couple of
to
restaurants,
debate. Yeah,
Bruce?
got Ruth's Hospitality, a smaller size company, cheaper stock. I like the technicals on Ruth a lot myself. Breaking out,
Is Greg on the stock report? Who's on the stock report this week?
I'm not certain.
Don't
Either
know.
Noah or Greg.
Noah or Greg. If this is Greg will fawn over the $14 trigger price because he loves cheap stocks. I mean, just loves them. Noah's going to fawn over the technical pattern here, so it's a pass through for me. Both of those, either one of those two will love this pick.
Can I guess what restaurant you have next?
Yes, absolutely.
Dave and Buster's.
Ooh, let's look at Dave and Buster's. They are on the list.
What's Dave and Buster's?
Play.
That's right. Same thing, same pattern,
same type of a deal.
I mean, the only difference is I think you got a little bit more return here. Similar pattern. Mm-hmm. These are ones swing traders love, volatility traders love, right? Mm-hmm. Where, Dave and Buster's coming down aggressively and you're looking at, oh yeah, watch me, hold my beer, watch this, trigger above 22, stop under 20. I'll take the risk, let it fly. If it doesn't, who cares? So I do think momentum and swing traders like this. This trade is not for the faint of heart though, right? The Dave and Buster's is a volatile play. I mean, it moves literally close to 8% every single day.
It's a high beta stock.
It's a high beta stock. So that's all I would say is that if my mother was watching the scouting report, I wouldn't want her trading Dave and Buster's, right? I would want her, thinking about something a little bit more conservative by nature, but swing trader is going to love this trade.
Mm-hmm. Yeah, I think that's fair. Did you? What about DRI?
I didn't see Darden. No.
Oh, I for some reason I'm thinking home builders. I'm like, wait, are they ready to break out? Is Frank's seeing something I'm not? They're ready because I'm ready for them to break out. DHR though?
DRI.
Oh, you want Darden?
So you got not hearing
you want
that.
Darden.
I want Darden. Now this is more of a Cody trade.
It's a Cody trade.
Gap up. We filled that gap into the 9, into that old resistance. Couple days of dojis. I think which Cody was here. I know he's not here today.
Yeah.
But I think one thing he really likes about it is your risk to reward on this trade versus say Dave and Buster.
Okay. The only question I have, because we're not taking 3 trades in
Agreed
this area, right?
Agreed.
Okay. So we would probably go through all of these and take our time and break them down, but just give me the one you're looking at. I think, you got Dave and Buster's again with play. Mm-hmm. We already broke that down very quickly, right? You got Darden here with the snapback retracement to the 9. And the first one was what again? What was the symbol?
That was Ruth.
Ruth. Ruth. Yeah, Ruth. And you got Ruth. All very similar patterns, right? All very similar patterns. You only can take one. Which one do you take? Ruth, Darden, or
I probably take Ruth personally. I think that's
and why for you on Ruth?
I just like I like the way that we were building above the 200 going into that gap. I like that we filled that gap up. I like my risk to reward. I liked that 9 springboarding us. I like that maybe they're a wee bit more mellow than Dave and Buster's, but not boring, but not boring, right?
No, they're still high beta stock.
Yeah, maybe a little bit more. Now, realistically speaking, especially with Dave and Buster's and Ruth, they probably are going to mirror each other, right? Yeah. So I'm either picking right or wrong.
Well, that's the thing. I mean, all of these, these 3 are going to work or they're not. Right. I mean, if they confirm they're working or they're not, all 3 of them. It's not one's going to work out and the other ones aren't.
Yeah, they're particularly like the Dave and Buster's, the Cheesecake Factories, the Ruths.
Yeah.
Yeah, that's but that's
Cheesecake's another one here.
Yeah, Cheesecake's another
35.
one.
Cheesecake might be my favorite one here. You know, the test of the old support, they're all looking very, very similar.
Yeah,
though.
they're all very similar. And as Ahmad pointed out,
Tim,
you know,
what
a lot
about
of
you?
pullbacks.
I'm looking at that Darden. My instinct is play, you know, so play is going to be my choice. But Darden has a very interesting swing setup just with the dojis instead of the confirmation today. So you can kind of probably wait on Darden for Monday. You can wait on all of them for Monday, by the way. But
Of course.
Darden's tempting me here, Matt, but I'm going to say play.
I think the most consistent one is Ruth. I think that's the more consistent one. I'm kind of interested in cake here. Like they're all the same. I just like the snapback retracement to 33.5. I like the inside candle. I like the trigger, pretty simple trigger above 35. Very similar analysis than you have on the Darden play as well.
I want to do my best impersonation of Noah and try some dad jokes here, but I'm going to leave them on.
Oh, yeah, no,
I'm going to
don't have
pass.
it in. You don't have it in.
I
Yeah, you would just sound offensive to people's ears.
It would be more like, you know, just not funny.
Oh, no, dude, we don't have it. We don't. No, we don't have that.
No, you
We're
either
not
have
the
that or
dad
you
joke guys. We're not
Cody,
the dad joke guys.
Noah and Cody are the ones who pull that off.
They are good at that. They are good at that. I'm signing up for cake, but it's close. It's close. I do like Ruth, and I think Ruth's probably the best trade for most people. Cake and Dave and Buster's and Darden pretty volatile right now.
Yeah, it's gonna be it'll be interesting. Well, I hope they all work out, no matter who you choose. Because I mean, we got.
I have a feeling they're all going to work out, or they're all not.
Clean entry. Yeah, exactly. It seems
they're
like
all
it's,
either going 4-0 or 0-4 on this one.
Yeah, maybe there's the one that can buck the trend, right?
Yeah.
So,
yeah.
What about a little breakout on Dan? DAN. Could I sign you up, T, for a little break?
I can always sign up for a
18?
breakout on Dan. I like Dan. Dan's a good guy.
Dan is a good guy, and it's pretty, you know, mellow little.
How many good Dans versus bad Dans have you known in your life? I'm positive on Dan.
My Dans are buddies. Yeah.
My Dans are good people.
You've known a lot of Dans, but you know,
most Dans are good people.
Yeah, most are.
Yeah, I like to break out because of that reason.
Yeah.
That's a legitimate reason.
In fact, one of my favorite people on the planet, his name's Dan. I used to ref ball games with him. Yeah.
Really?
Dan. All right. You got me.
Dan the man. Dan Marino. Who hates a Dan? What are we doing?
That's true.
Absolutely.
That is true.
Greatest quarterback, like greatness.
This one for me would be simple. We'd move it into the second round, and I would look at all the other breakouts because until you have context, you know, it's set up. You can't argue with the setup.
Well, that's the thing with all these setups.
Yeah, and that's really what you do. We do in the scouting report meeting, right? You go that extra mile. I don't have time to go through all of the risk for reward. I do on my favorite. Right before we get together, but my list is usually fairly substantial. You know,
well, there's a lot of times where it's just like, yes, that's a yes. Put it on. Let's figure out the analysis.
Yeah,
but a lot of times it's like, let's put it into the second round because Frank, you got a lot of picks. Tim, you're gonna have a lot of picks. I'm gonna have picks. Everybody's gonna have picks, right?
Yep.
And we got to cross compare analysis. So a lot of times it's just moving on to the second round after we get through. Well, it's like cut down day, right? Cut down day. We have cut down 1. We have cut down 2, and then you have the final.
Yep, that's basically how it goes. I'm right there with you. Now, let me ask you this. So I know, Matt, you're off on crude. I agree. I don't think crude is a very friendly environment to trade. But are you getting interested at all for a swing trade, mind you, a swing trade with some of the potential reversal type?
I will just put it like this.
We're getting in energy.
I will just put it like this. Okay, and then we'll save the energy analysis for the scouting reports. But I'm willing to bet energy has the biggest upgrade in sentiment in our newsletter of any sector this week.
Yeah.
Yeah, I think so. I mean, you're seeing some reversal patterns. It's hard to trust, and I've been off the energy train.
It was also the most rated, So,
yes.
So
it's
there's nothing though. Listen, we can throw cold water on it, fundamental behavioral, economically, and every other form of analysis, right? But there is nothing in what's happened this week where you're not like, I like what I'm seeing in it. You like the movement, you like the stability, you like the when the market was coming down, it kind of consolidated. I mean, so
I agree.
Can it be sustained?
I'm willing to talk about energy stocks later. After all the restaurant talk,
Let's save
I
the
want
energy
lunch.
conversation because that literally is going to be a lengthy conversation.
That is going to be a lengthy conversation. Well, if you are interested in, if you are a believer in a turnaround, even
give me one of them, Frankie.
Right, ExxonMobil, XOM would be an example.
Big dog fishing.
Big dog. You go Holly Frontier, HFC.
Would this be like pike fishing, big dog fishing, like going up and getting like Alaskan pike fishing?
I don't exactly know what it would be like, but listen, a reversal is a reversal, right?
This is true.
And so whether it's something I'm ready to trade, or
Well, what do you think? I mean, if energy is consistent, Exxon's going to be consistent with it, right? So
I would agree. Yeah. So I think that if you're going with the route of the bigger name, you're probably going with the sector.
There's a lot of big ifs here on energy, right? There's a lot of big ifs, but the only thing I'm going to say is this: have you had a better scenario to take a stab in energy, technically, and maybe this breakout after the double bottom, double top scenario here?
Yeah, that breakout was clean, but you haven't had a better. And this one may be a better scenario than that, by the way.
That's momentum in energy. This is actual, support bounce after a breakout type thing.
Right.
I kind of
like it.
I like the chart here. I'm not an investor in these companies, but a trade setup, I think you can see something developing.
I may never invest in traditional energy again, but there's going to be times where they are amazing position analysis. Mm-hmm. And I think that's what we might be seeing develop it here. So I think it's something we got to keep an eye on. Absolutely. And I'd be willing to bet there's a couple energy picks on our scanner reports this week.
Oh, there will be a couple. There will be.
I think there's going to be. I mean, there's some that kind of stood out to me that were at least worth. I mean, my brain's just been off of energy for so long because of its performance, right? So nothing fancy, but you see those signals and you start thinking, man, those are some good risk to reward scenarios from a trading point of view.
And you take a look at ExxonMobil, and you got this significant downtrend here, slowing momentum here. You got a little bit of a short-term head and shoulders. You violated the neckline. You're above all the moving averages. You snap back test to the moving averages right there at 35. You confirm on the way up. There's a lot to like here about ExxonMobil, and quite frankly, I have my concerns in energy in general because it's been such a dog for so long. And again, I have said this many times that I am a long-term bear on energy, but that doesn't mean we haven't seen a lot of that baked in over the course of the last 5 years. So in terms of in energy, specifically in oil, these companies are not just oil companies, but in that, I'm kind of interested here, Frankie. I think technically your best technical scenario you've had in energy in a short-term analysis than you've had in a long time.
Yeah, I would agree. I think it's worth, maybe we're not ready, right? And that's perfectly fine. But I think, you see those signals, and you at least want to start warming up to the idea, right? Think what, kind of think through the process.
And it is amazing. I just read what Blake said, what a flip-flop in market cap over the last, Blake, I remember when I was a young trader back in 05, 06, and 07, I mean, it was ExxonMobil, it was Walmart, but it was ExxonMobil that was the big dog of all the market. And I believe ExxonMobil had like a market cap of $360 billion. And, it was the biggest company like in the world. And it was a major market mover. It's just not that anymore. It really does show you the evolution that our economy is going through over the course of the last 15 years. And, as evolution happens from an economic perspective, you're going to have winners and losers in industries. And, tech has been the king of the hill, and energy has been the victim of that.
Yeah, pretty nutty to think about it, because you're right. Back in my early days, which were kind of lined up with yours, much different names were at the top. That is for sure.
Oh yeah. I mean, we talked about Apple, right? Apple was one of those big things.
We talked about Apple, but we also talked about like research in motion.
We didn't talk about Amazon.
No, we didn't.
We talked about Amazon like we talk about like bookings.com. Like that's how it was.
Yeah, it's a thing. It exists every now and then. Something lines up. Yeah, it was definitely a different time, right?
Oh yeah.
So let's take one more break. We'll look at a couple bears. I know we got to wrap up here, and that's Colgate-Palmolive, CL.
I like this one already.
Done.
Yep.
Moving on.
Yeah, that one's pretty, and the development's been nice, right? This, higher low today, but not break out. So we, got to,
Now, literally, if we were in the scouting report, Frank would not have done what he just did. We would just, when it's moving on, it's like, stop talking. Everybody stop talking. Everybody's agreed, because all you're going to do is talk somebody out of it. Move on.
That is probably true. All right, I lied. Let's look at one more bull, and I'm going to let's look at two, because they're both in the financial space. You've got Comerica CMA, pullback style, very much like the restaurants. Almost,
yeah.
If you didn't know it was CMA,
thing.
You'd think, okay, well, that's there. And then also our friends at AFL on a breakout. Could I sign anybody up for?
Well, I'm not signing up for Comerica in any capacity, but I might AFL.
AFL's looking pretty
maybe
good.
Talking to that break. Yeah, I mean, that was nice gap right into resistance, pullback, fairly mildly, I guess, working back into that resistance level. There are definitely some financials that have that restaurant-y vibe that look a lot, like.
Well, they all look the same. And
it's odd because
there's nothing wrong with Comerica's trend or pattern. It's looking.
It's
just
a name
like
thing.
Restaurant.
Yeah, you don't like their name. Right?
I don't like Comerica. But the trend, the pattern's fine. The question is, they're doing the exact same thing as restaurants here, because that theme is developing.
Mm-hmm.
And as that theme is developing, you've got to be a little concerned with over leveraging yourself, right?
Yeah,
because
you can't take them all.
if you go think you're buying, the bank and the restaurant, thinking you're all completely diversified on it, you're not right now. No, that is a theme that is developing. So I'd be a little concerned with too much ammunition in that area of the market that's all doing the same thing.
I would
agree. But again, that's when you move it on to the next round and you break them down then.
Yep. You compare them versus one another. One more ATI. I lied. I always have one more.
It's not going to end. You're going to have to cut them off, Tim. It's not going to end.
It's not going to end.
Listen, Tim, this is on you. It's not going to end.
I love these charts. What do you want me to do?
Yeah, I'll drop screen and allow you to share if you want.
These charts. Allegheny, beautiful little reversal here and some nice strength on it, Frankie.
It's looking like maybe we're going to get a confirmation candle here today.
Good.
Some room to run on these guys too until they get to their next levels of resistance. So another
cheap
little
stock
break
too.
out there. Yeah, nice little cheap stock.
Frank, you got a lot of bottom feeding, economic reopening, vaccine plays here. Is this an area of the market you're like, this could have some legs?
Listen, I just go with the signals. As a trader,
like, all I did was run my scan.
I just ran my scan. I'll compare them. I'll compare the risk to reward. Do I have a strong opinion of airlines versus restaurants? No, I really don't, to be quite honest with you. I do think your words are wise not to go all in, on so many of these reopening type of plays, because they tend to move together. I think that's always going to be good advice, but I'm perfectly happy to take the next swing on any of them. Personally, if the signals
give me some
there.
bear picks, Frankie.
All right, let's look at Altimmune, ALT.
Bear retracement into the falling cluster of every moving average after a negative reaction. After a negative reaction to earnings, I like it here. The only question I have is, where would we trigger? And you're probably triggering under a confirmation of $10.
Mm-hmm.
Yeah,
it's a good trade.
It's a good trade. I think risk reward should be there.
This is a gentle reminder of when blow off tops happen. A lot of times they do this.
Mm-hmm.
Yeah,
reality does come back in and settle.
Reality can hit you pretty hard. Yeah, it's
true. Robert, value investing is not completely dead, and in fact, I think value will make a comeback over the next decade.
Yeah, it'll come back at some point.
Mm-hmm.
What about a breakdown on DT?
There was a reason I gave it a decade projection, Frank.
Yeah, it
might take some time.
It might take some time.
Might be long, yeah.
But it's coming back.
Might as well go 20 years. Yeah, I'm going to go 20 years, right? Yeah. So what about
What's
a little bit DT, Dynatrace?
Oh, yeah, Dyna.
So we've got
breakdown here?
Breakdown. We've broke support already below the 200. Probably want to take out those lows of the last couple bounces, right?
I would say so.
For confirmation, for me at least.
Right
But
here, Frankie, right there.
yep,
I'm getting you there, right there. Let's go 3360. I'm
I'm good
calling
with
it
that. Yeah, I'm good with that.
3360
If we
DT
get that, it's going
breakdown.
to be a little bit of a inverted cup and handle, right? Not a lot of good things going on the chart
I was
going
seeing if we
into it.
could be a little bit more aggressive on the trigger, but you
Yeah,
can't.
it's with these guys personally. If we had a little tiny doji today, maybe we could have,
Yeah,
but that's not the way that the day
I like the breakdown here.
So what about a breakout on EXEL? I like the DT breakdown better than these guys
I do like the
myself.
DT breakdown a little bit better. Here's the thing. You'd have to wait for confirmation. You couldn't trigger aggressively underneath 20. 20 is a significant whole number, number one. And one of the reasons that it's a significant whole number because it is a $20 bill, and psychologically, that's how we behave. So here's why you can't trigger aggressively. Test, recover, test, recover, test, recover. So I think the DT breakdown underneath 3360 is far easier in terms of that mechanic than, okay, where are we going to close underneath 20? That's fine, but do we have to close underneath 1980?
Right.
I think there's a battle going on a little bit there.
Well, and this is where I always would get a little bit greedy because I 100% agree with you on that. As I say, hey, I want a 9 to keep falling. I want to kind of build this little floor, a little shelf. Right. If this breaks down like Monday or Tuesday, it's a tough sell for the reasons that you pointed out. But if we dance around, for a few days, let that 9 continue to fall down and push us through.
This is a tackle trading Twitter account potential pick for next week.
I think that's fair. I think that is fair.
But not watch this. Look, we would need a little bit more of a consolidation. Let's clean up that $20 price point a little bit.
I think that's a fair way to. I think that's a fair.
Let's go give it a bath. Just clean it up a little bit.
Yeah, a fair way to look at it. All right, let's do one more. Let's do Nomad. ONMD. Definitely, the theme in the market, as it usually is a lot more clean bullish trade setups than bearish, but there are some bearish retracements and breakdowns out there, and it's always important to have at least a few on your list, even if you're not going to
listen,
don't want to do anything with them, right?
I'm not the guy that vetoes kiss of death. So
you got
but there are more cowardly individuals out there who will.
So yeah, that's kind of the thing. We do have that double top support break, retrace into that falling 9 EMA. Like I said, I'm not, I'm looking, honestly, I'm looking for a break going in. That's what my expectations are, market wide. So I'll have that leaning like probably most people here, certainly you, Matt and Tim. But I do think, we want to have a few of those candidates. They don't have to be my candidates, right? But I think we want a few candidates. If we do see some failure at resistance, right? If we fail at resistance, ain't going to be the first time that's happened, right? That's certainly just I don't think it's going to happen.
Give me the weekly chart real quick. We got Coach Mark here. I got to see.
You're not going to love the weekly chart. Nobody's going to love the weekly chart, and that's why it would get vetoed.
Yeah. There's a little quick trade there though on that daily if you wanted.
There he is. Yeah. Tight target, but you do, and you got a trigger underneath 2360. Let me get the right number. I think it's 2335. Got a little bit of a double bottom intraday analysis there. Quick target, previous pivot there, 2250. So, I mean, you got a tight target there. Your stop loss has to be above 2380. You can map it out and do it, but that weekly chart is a nightmare. I'm going to veto.
Let me ask you this, Matt. Do you have what it takes to go bear on Zoom or Peloton?
By the way, you guys didn't just catch the fact that I just called myself cowardly.
It's okay. When I call myself cowardly, I say it out of love for myself.
I said other coaches are too cowardly to do the kiss of death formation, and then I just talked myself.
And then you talk yourself into it.
Because if you keep analyzing it, eventually.
No, the weekly chart's ugly. The weekly chart's ugly. So no, I'm just saying I called myself the cowardly lion there. That's all I'm saying. Mark, what's up, buddy?
Hey, Mark.
How are you guys doing today?
We're going through some scanner report picks for the last 30 minutes or so.
I figured that we were doing charts, and so I was like, I love charts. There's trades where you make money. I was like, I'd show up.
Hey, I have one question for you. I know you're not prepared for this. I'm going to put you on the spot. DraftKings spent more money in advertising than they did in revenue. You concerned?
Well, listen, obviously DraftKings, one of the stocks I follow probably as close as anything, and read through it all. There are some structural things on DraftKings I really don't like. I still buy the story. It's just a matter of valuation.
Yeah.
It's a matter. It's one of those things. Like, I truly view DraftKings as a 10, 15, 20-year investment, and so I want to get in at a good price that I cannot worry about it, like the ups and downs. And so for me, that's in the low 30s. And I've been saying that, and I read that report, and I was like, I got nothing to raise my target on. So I was like, and so I'm still low 30s kind of guy on DraftKings, and I buy the long-term story. There's some wonky numbers, and the valuation is a little blah. So give it to me in the low 30s, and I can hold it for the next 15 years, and I don't have to worry about it.
Mm-hmm.
If I get it close to 50, I'm starting to worry about it. I'm like,
There's not a lot of difference between 20 and 50 for the next 20 years on DraftKings, so.
So it's just peace of mind, because like if I buy it at 50 and like something like I see an earnings report like today, I'm like, oh, do I have conviction? Do I have a margin of safety? Plus I'm cheap.
Mm-hmm.
So
all right, but I again, when we're talking about, and I want to be clear on what I just said, the difference between 30 and 50, yeah, it's a big deal for DraftKings, but if the fundamental analysis plays out over the next 10 years and DraftKings splits 4 different times, that difference is pennies.
it is very little difference. Yes.
So, I mean, that's like saying, like, and I know this is a bad example. Let's go back to 1988 with Microsoft, and let's say it had a $20 to $30 range. Today, that range would be 3 cents.
Yes.
So that's why I said what I did from a valuation perspective.
And fair enough. And it's about like managing margin and cash available and making sure DraftKings doesn't represent more of a higher percentage of your portfolio than you want. It's that, like, I believe in the long-term story, though. I mean, I believe online.
Well, and I do too, but I did get a little concerned when I saw the headlines of DraftKings $200 million in advertising revenue, $130 million, and that obviously cannot be sustained. And the question I have for DraftKings,
I don't think it can, right?
Well, we are embracing a new debt age in America. So
the government does that every year,
Maybe it can, but I do think that is a question, right? Because their advertising is working, they're just not converting from freemium to paid products at DraftKings. And so their $200 million is being looked at as a lost lead right now, which is understandable. But they got it, like TikTok's got to weaponize their revenue streams in TikTok. DraftKings got to weaponize their database, and
it's so hard. And this applies to, I mean, this is the same analysis applies to a Tesla or an Uber or a Lyft, not Tesla now, but Tesla before, where you have these newer companies, and you're like, do they have a path to profitability? Because that's the key, because they're going to lose money at the start. Now, Tesla turned that corner, and look what happened to Tesla when it finally turned the corner, right? Boom. Uber, Lyft, I don't know what their path to profitability is. A lot of these marijuana stocks, I wonder about. I think DraftKings has a path to profitability. I think their advertising in the space is building brand name that has long-standing consumer viability, and so.
Oh, they've got their checkbook open right now, and they're going to continue. I mean, they're going to spend for a while, because that's what growth companies do. So you still believe in the long-term thesis? Is that what I'm hearing?
Yeah, I think it's going to be years before DraftKings turns a profit.
Yeah.
But do they sustain a big?
That's a great point, Mark. But for me, it doesn't matter if DraftKings takes 2, 5, or 10 years before they show a profit. Amazon didn't show profit for 17 years after they went IPO. This is what growth companies do. They go into debt to build their empire, and their empire pays off over time. So if the path to profitability is still there, fantastic. And I still believe that. I do have questions whether or not they can convert their freemium products to paid products. I don't have a problem with their $200 million in marketing with $132 million in revenue. I have a problem with them not converting, cheap free-based, email generated type leads. We need to see them be converted to paid leads. Revenue has to start increasing. Even if debt goes up, revenue has to start increasing.
Yep.
No, and if you want a more stable part of the online betting, not the online betting, but yeah, the online betting universe, all of that. I mean, MGM's a good way to go, right? So,
if you want a company that makes money, yeah, yeah.
Like
go with MGM.
And I'm a big fan of their bet MGM. I think MGM is going to do very, very well.
Mhm.
So if you want something that's more established, something that MGM, one way to go.
Talk about a confirmation candle. Wow.
Yeah, that was pretty. Yeah, that was nice.
Frankie, I know you'll understand this. Some in tackle trading won't, though. Man, that is just too good of confirmation.
Yeah, that is a beauty, right? That is a beauty.
Just too good.
Sometimes it's just too pretty.
Just too pretty.
All right, boys.
Well, always fun. Appreciate team
Frank,
as
you were
always
awesome.
for having
Thank
me.
you so much.
There's two
Always
things
enjoy it.
we got to do before the end of the show. One of them is my man Christian even got a hold of me this morning and asked me to promote this for the second day in a row. We've got some feedback. Matt, can you go to the Trade Center? I'll drop the link to the survey in the chat for our users. If you're out there and you were watching the show yesterday, you know what I'm talking about. We're creating a survey, and I put the link in the chat so that we can get some feedback from our regular users, people who've been around tackle trading, halftime crew out there. Those are the types we're looking for to let us know what you want to see in the Trade Center. We're looking at a longer term project here. Matt, kind of explain what we're doing with this and what we're looking for.
We did a major change to the Trade Center about 2 years ago now, where we wanted to basically get a point where you could navigate everything you need at tackle trading. You could see the latest post. You can kind of when you're watching one of our courses, it will remind you where you're at, let you know what to do on a daily basis, have the ability to chart, look at the halftime report. But like a lot of things, you evolve over time, and like a lot of things over time, when you don't aggressively try to pull those weeds out of the garden every single day, they have a tendency to grow a little aggressively and get a little out of hand. And I think that's kind of what the Trade Center did. We want the Trade Center tackle trading to be destination, to be where you can conduct your daily routine, get news, get latest stuff, all that stuff, kind of like your home base, the Trade Center, your home base of tackle trading. And we feel like it just needs to be updated and to be put a little nice little shine, new paint job on it to a certain extent. And so we felt like it was best. We've identified a few power users of our pro member community, and they're doing some surveys, and we're going to do some webinars with them next week to talk to them about changes they would like to see made. And we felt like the halftime crew would be a great way to get some more ideas on what we need to do to improve the Trade Center, to make it more customizable, unique to the end users, to make sure that they have that home they can come to, so they don't need to go out there and check a million different sources. We want to create a community of like-minded individuals that can go get the data and the analysis they need to navigate their trading business on a daily basis. So guys, our good friend and coach Christian Sisson put together a survey for the Trade Center, and I would absolutely love it, guys, and if you guys could take some time and share your thoughts with what you think of the Trade Center, what improvements we can make to the Trade Center, because that's what this is. It's just is a way to get some ideas that generated out of our community, so that we could always be on that cutting edge and making sure your guys are getting the information you need on a daily basis. So, I know many of you have already filled it out, and I thank you from my bottom of my heart. We're trying to get better for you guys. So if you could take some time and, fill out that survey, should only take a few minutes, won't be very long. That'd be absolutely fantastic. And Tim, thank you for putting in the link there to type form. Appreciate that.
Yeah, appreciate those of you who've done it, like Matt said.
sure.
And if you've not done it yet, take a few minutes if you got it, and let us know if you have any questions. Marky, also, last thing is you got a show coming up here in 45 minutes, and then one on Sunday night. Kind of explain, what those shows are all about, and kind of promote them for us.
Yeah, we do this for pro members, right? The last hour of the trading week, go over the commodities for the week, and then we take questions, call it at the market bell. Last minute trading, adjustments, last minute questions that you might have on your trades, this and that. We do that at 3 o'clock Eastern, coming up in 45 minutes. And then on Sunday night, I do a weekend prep class where we go over all of the big events for the coming week. Talk about the themes that are in the market, what might alter those themes. We're obviously going to talk about the rotation theme on Sunday night, what that means, what are some of the ways it could play out over the coming months.
Beautiful.
And that is at 8:30 Eastern on Sunday night.
Yep. If you're a pro member, you can find any event we do on the events page over in that near that trade center, I should say. Guys, fun week here in the halftime report. We appreciate everybody out there so much. Have a safe, wonderful weekend. Make sure you get ready for those scouting report. When we drop them as well, we're going to be having our meetings here for the rest of the day, getting them ready. Other than that, guys, we're out here for a Friday. We'll see you guys Monday in the show. And Mark is now the host. Mark came in and took over the host.
We're just